The webinar will begin in 1 minute. Welcome, everyone. We are pleased that you have joined us for today's webinar titled Using the Income Tax Return to Better Serve Clients. The webinar will last approximately 20 minutes, and at the end, you will be given an opportunity to receive supporting materials by email free of charge to you. You will also be told how you may email questions related to today's content to the presenter. Today's presenter will be Linus Sugis. Linus is the president of Advanced Underwriting Consultants. He and his team answer tax and technical questions posed by producers every day. Linus also spent 14 years working in the home office of a life insurance company in various roles. He also started, ran, and sold an estate planning law practice in the Nashville area. Linus will draw on his legal and life insurance experience during today's webinar, and here he is.
Thank you very much, Amber. I'd like to welcome all of you to today's webinar entitled Using the Income Tax Return to Better Serve Clients. Income tax return is a source of great information that we can gather without having to spend necessarily hours and hours with our clients. And so we're going to talk about that today, what kind of information is there and how it can be used. But before we get too deeply into today's session, let's go ahead and decide what it is that we're going to talk about next month. Next month's webinar will be the first Wednesday of the month, just like it always is on August 3rd. And you will have 3 choices that you can vote on. Business continuation and the Broncos. There's a case study on that. Second choice is free online resources to use in your business. And the third choice is the cost of insurance conundrum. And so what I'm going to do is I'm going to go ahead and start the poll. And if you'd go ahead and take a couple seconds and make your choice for what we'll talk about next month, that would be great. Please go ahead and do that. If you haven't yet voted, please go ahead and do it. I'll give you a second or two yet to finish up. All right, let's go ahead and close the poll. What we'll discuss next month is free online resources to use in your business. Free online resources to use in your business. Thanks for participating in the poll. That'll be on Wednesday, August 3rd at 11 o'clock Central Time. So let's go ahead and get into the topic for today. What we're going to talk about is we're going to talk about using Form 1040 and the information on it to help serve our clients. We're going to also take a look at some of the common tax schedules and the relevance to us and to our clients and the information that can be gathered there. We're going to talk about areas to explore with our clients to help serve them better, and we'll really enter into a discussion for future years tax management. From my perspective, CPAs are really good. Most of them are really good at recording history. They are less good at helping clients predict and create the future. It's one of the things that financial professionals like you are better at than CPAs are, and that's really an opportunity. And what better place to start with the information that's needed than the client's income tax return. Form 1040 is reproduced here, so you have an idea of what that looks like. And let's go ahead and start with some of the information on Form 1040 and talk about how it might be used. Let's start with the easy stuff, which is filing status. What we've got is we've got a form where client checks the box at the top of the return. And you wouldn't necessarily think that there's information there that's of use to you, but there kind of is, and I think it's good to pay attention to that. If we've got somebody who is single or qualifying widow or widower, we are in a situation where we have the right to ask about estate tax planning. We've got no unlimited marital deduction for somebody who is single. And so they have an estate tax threshold that's a little over 12 million bucks. If they're worth more than that, they've gotten a federal estate tax problem, and we have the right to talk to them about that. For somebody who's single and if they're still working, we've got risk to the family of disability that is worse than it would be probably in a married situation. So we have the right to talk to people about that. And if we've got somebody who's single or a qualifying widow or widower, we can ask them about future marriage. Why is that important? Well, if their marital status changes in the future, then we'll need to look at their beneficiary designations. We'll need to ask them about their estate planning documents. If they have become single because of divorce or become widowed or a widower recently because of the death of the spouse, again, it's an opportunity for us to talk to them about their estate planning documents, to talk to them about their beneficiary designations, to make sure that those things are still correct and current based on any circumstances that may have changed recently. So filing status shouldn't be overlooked. It's certainly something that can be talked about with our clients. If we've got a married client, we've got other things to talk to them about in terms of filing status. If they check one of the two married boxes, married filing jointly or married filing separately, the question becomes, is the spouse or both spouses U.S. citizens? Why is that question important? Well, for estate tax management purposes, the unlimited marital deduction is only available if the surviving spouse is a U.S. citizen. So if we've got not either spouse or both spouses perhaps being non-citizens, we have to worry about what the shape of the client's estate tax management might be if we've got somebody with high net worth. So that's the first thing. The second thing is we've got the right to ask our clients about whether or not the marriage is stable. Not looking to provoke trouble where none exists, but if the marriage is not stable, thinking about issues related to beneficiary designations, thinking about issues related to asset titling, thinking about issues related to asset protection and keeping assets potentially separate in the event of a divorce are all things that need to be thought about or need to be discussed if the marriage is less than stable. If one spouse is engaged in activities that involve financial risk where the other spouse isn't, thinking about the way assets are titled and thinking about techniques that might be employed to manage liabilities of the one spouse, those things are things that should be thought about, should come up in relationship to filing status. So those, as I said earlier, filing status is a category that should not be overlooked. So the label area, what are we talking about here? We're talking about just below filing status, where address information, social security number information is on the form. And this is a logical place to start exploring with spouses about their approach to social security benefits, right? If we've got somebody who's of an age where they are either about to collect or thinking about collecting social security benefits, they should think about their claiming strategies, right? The timing of social security benefits. If we've got people with long lives, usually if they're entitled to social security benefits, it makes sense for them to wait till as long as age 70 to claim benefits. If we've got other considerations at play, shorter lives, need for early income, claiming early certainly ought to be explored, and using other assets to supplement what is available from Social Security needs to be discussed. So that's the time to ask about it because Social Security numbers are there on the form, and Social Security information can be requested from the Social Security Administration. Address, has the client recently moved? Is the client in a new state where they didn't live before? They ought to look at their estate planning documents. Did they sell a house? That needs to be thought about. Is the principal residence exclusion available on the sale of the old house? Are they buying? Have they bought a new house? Are they renting at their new address? Those issues should be thought about for the purpose of thinking about the standard deduction versus itemized deduction for mortgage liability. All of those things are things that can be harvested from the label area. And by the way, the list that I'm suggesting is not comprehensive. It's just to really kind of get you and your client to start thinking about the issues that may be affecting them. So let's move on from the label area and move to something that's a little bit more substantive. Let's talk about the standard deduction. These days, it feels more of our clients than not are going to use the standard deduction rather than itemize deductions on their income tax return. What is it about the standard deduction, check the box, that we should be looking at in particular? Well, if we've got somebody who's older than 65, they were born before January 2nd of 1957 for last year's return, they should be thinking about their Medicare coverage, their Part B premium management. Those of you who work this market know that Medicare Part B premiums can be higher based on the client's adjusted gross income. And so if you got somebody with higher reported income, they may be paying more in Part B premiums, which is a hidden tax that ought to be thought about and managed. And if you've got somebody who's 65 or older who's not yet claiming Social Security, or whose spouse is not yet claiming Social Security, thinking about the Social Security claiming intentions ought to be part of the conversation with that kind of a client. So the income part of the form comes next, and there's a lot of stuff that can be talked about here. If your client has significant wage or salary income with W-2s, the question becomes, when are you going to retire, and do you have enough stuff? Do you have enough to support your retirement lifestyle? If you've got one or both spouses working and getting wages, the question is, will the family have enough income in the event of retirement or disability? Is the family's lifestyle dependent on both spouses working? Those questions should be asked. Is there an emergency fund available? Is Social Security benefits part of what's being collected? And if so, should life insurance or Roth IRA strategies be considered to reduce the exposure to taxation on Social Security benefits? If somebody's got high income, total income, that's an indication of wealth. Has somebody talked to the client about their potential estate tax liability? Are changes in income expected? Are 401k or other tax deferral techniques being used to defer income? Does the client have tax-free, tax-deferred buckets to help with income tax management? If the client provides a W-2 and it indicates a retirement plan, is the client maximizing contributions to the retirement plan? Has the client had to take RMDs from IRAs? And does the client need to take RMDs? Is the RMD income needed? If the answer is no, then QCDs ought to be thought about. Lots of opportunities on the income side to have further conversations to clients. So the next question is, what are the adjustments to income. These are on the front of the form. These are not necessarily deductions. These are above the line adjustments to income. This is part 2 of Schedule 1 for Form 1040 primarily. Things like self-employed SEP plans, things like certain kinds of other adjustments that might be available to clients. The adjustments to income will mostly come up if we're dealing with the owner of a closely held business, and if the client doesn't have any adjustments to income for SEP or other pension plan, those types of plans ought to be considered. If the client has a closely held business, the question about incorporation or forming an LLC to limit business liability management ought to be thought about. Certainly other insurance products can be added to that discussion. Do you pay for health insurance from the business? That ought to be thought about. Is there alimony that is deductible because it's grandfathered? If so, what other financial obligations exist in relationship to a divorce? If there are loan repayments that provide some adjustments to income for interest, what provisions are being made for paying off such loans in the future? Those are all questions that can be asked as a result of information that is gathered from Schedule 1, adjustments to income on Form 1040. Most of our clients, rather than having adjustments to income, will potentially be Schedule A filers. The tension here, of course, is that the standard deduction these days is much bigger than it's been historically, and so fewer of our clients will be filing Schedule A. But for those that do, and for those that have them as part of their income tax return, there's a lot of information there. If there are significant medical and dental expenses, question is there adequate medical insurance? Are dependents covered? Has the client looked into post-retirement healthcare coverage? Should the client have a sinking fund to cover medical costs that aren't covered by insurance? Is long-term care part of the picture? Should it be considered? For our clients who don't itemize, perhaps it's because they're renting, is buying a home to be considered rather than renting, and perhaps generating itemized deductions through mortgage loan interest and property state issues. Is there any out-of-state property that might create probate issues for heirs? That's from line 8. Refi, accelerating mortgage payments using permanent life insurance, leveraging charitable gifts, stacking charitable gifts, making charitable gifts through payroll deduction, talking about charitable trusts, whether remainder or lead. All of those things can be thought about as part of the information that's gathered from Schedule A. And so don't overlook it. There's a lot there, that can be talked about. So that's just scratching the surface. Obviously, for our closely held business owner clients, they might file Schedule C or might have business income tax returns that would be part of the information that you get there, and buy-sell planning and qualified plan consideration are things that ought to be talked about with those clients for sure. But what other takeaways might we have here? Well, I think that offering to help a client save money in the future on income taxes is a good way to start any conversation, start any relationship with a prospective client. All our clients want to save monies. Very few of our clients love paying taxes, and so saving money in the future is a good way to jumpstart. I said this earlier, I'll say it again. Most of our CPA friends are very good at what they do, and what they do best is they record the past. They do a less good job, most of them, of helping the clients predict the future and manage future taxes. And so that's a tremendous opportunity for us. And the federal income tax return is a good way for us to gather the information needed to help clients save money in the future. And that's right. And so each section of the income tax return can provide information that's of critical importance to a client. Don't overlook any of it. Do a good job, ask the client for the return, look it over, engage in the right conversations, and serve your clients better. I'd like to thank you again for joining us here today, and hope you'll join us again next month. And I'll turn the program back over to Amber to close us out. Amber?
Thank you for joining us today. As a reminder, if you would like to receive supporting materials, feel welcome to email us at asktheexpert@advancedunderwriting.com. You may also email questions related to today's webinar. Feel welcome to join us for the next webinar on the first Wednesday of next month, August 3rd, at this same time. Next month's webinar will be titled Free Online Resources to Use in Your Business. You can also find an archive of past webinars on our YouTube channel, Advanced Underwriting Consultants. Please subscribe to our channel. It helps us to keep making free webinar content. Today's presentation will be posted on our YouTube channel by the end of this week. Finally, for more information about the services that Advanced Underwriting Consultants offer, including phone consultation and newsletter licensing, feel welcome to contact us at 615-224-1291. That's 615-224-1291. Thanks again and best wishes for continued success.